We can try, for example, Euro JPY, Euro CHF, Euro Pound. Now let's come to the UK. The UK is one of the major global economies. Of the G7, what is their currency? It is the pound. Now, which countries are included in the UK? It includes England, Scotland, Wales, and Northern Ireland. What are the major industries? Unlike the Eurozone, whose main economy is Germany with a focus on manufacturing, their main focus, like the US, is on the services industry. It is a net importer of goods. Who are the major trading partners? The Eurozone and the US. And where is the world's largest forex financial market found? In London. What is London? Where is it found? It is found in the UK. Now, what is the central bank of the UK? It is the Bank of England, BOE. And this is the world's oldest central bank. That is, the first central bank was established in England. In the 1600s, what are its goals? It has only one goal: to keep prices stable, support economic growth, and maintain employment. Now, it has two functions. Unlike the European Central Bank, just like the Federal Reserve, it has two purposes. The economy should remain good and prices should be kept low. It aims for an inflation target of 2%. What are the tools of the Bank of England? The bank repo rate, the same interest rate that is charged. Open market operations. Similarly, they buy and sell government bonds to control the money supply. That's all. Now we will read the story of the pound. The pound is also known as sterling. It was the world's largest major currency, and before the US dollar, the pound was the world's currency and the most traded currency. At the time, this pound USD is one of the most liquid currency pairs in the world. But understand this, it can be very volatile. Unlike Euro USD, it spikes up and down a lot. The pound is often influenced by risk sentiment. If the market mood is good, the bond will go up well. If the market mood is bad, the pound will weaken, and if investors are feeling confident, they turn to buy the pound. Now, what are its economic indicators? Same as everyone, we have the CPI major inflation. The UK unemployment rate shows how many people are out of work in the UK. GDP, gross domestic production, overall size and growth. So, what is happening in the UK market? Purchasing manager index gauges how confident businesses feel about the economy. The Consumer Confidence Report measures how optimistic consumers are about the economy. What makes the pound move? Changes in the monetary policy. If the Bank of England raises the interest rate, the pound will be strong, and if it cuts, it becomes weak. Economic news from the Eurozone and US. Why from the Eurozone? Because the Eurozone is the UK's exact neighbor, trading partner, major trading partner. So what happens? If their economy is weak, then the UK's will also be weak. And if it is strong, then theirs will also be strong. The US is also its major trading partner. Remember, when two countries are major trading partners, each one's economy affects the other. Because if it is buying goods from them and their economy becomes weak, then the demand for goods will decrease. So obviously its industry will also suffer. So they are correlated. Then sentiment. When investors feel risky, they buy pounds. When they feel cautious, they sell pounds. What are the characteristics? This is also a standard lot of 100,000 pounds. The value of pips is also calculated in US dollars. Traders should have enough US dollars in their account. Now, how do we navigate this virtually? We need to pay close attention to UK economic data releases because the pound reacts a lot to them. And remember that you have to keep the pound USD very far because its volatility causes large price swings. It will suddenly go to the level of 100 or 150, then it will come back. You have to keep the stop loss far. Whereas the Euro USD is not like this. So we have to understand the nature of each currency pair. Now we come to Japan. Japan is the Asian economic powerhouse, a major global economy, one of the G7, and its currency is the Japanese yen. Geographically, it is an island in East Asia. A very, very big island. Major industries, technological industry factors, highly developed. Sitting in Japan, their focus is on exports. It does not have manufacturing, but it has a lot of technological manufacturing, so it is an export-dependent country. Who are its major trading partners? China and the US, one of the biggest centers of financial markets, which we call Tokyo. Who makes the interest rate policy here? The BOJ does. The Bank of Japan has made it. It's a main goal. Just like the ECB, its main goal is to keep prices stable. It has a unique relationship with the Ministry of Finance, Kichun Jashi, which can sometimes create tension. Unlike in the US, ECB or Bank of England, where the government does not interfere,
Japan has a central bank where the government does interfere. The Ministry of Finance interferes, which causes a lot of tension between them. So, what is the tool of the Bank of Japan? And it discusses like this because the Ministry of Finance also creates false support to maintain its currency, then suddenly creates indifference to decrease or increase the rate of its yen. So, what is the tool of the Bank of Japan? The same open market operations, buying and selling of government bonds, controlling the money supply. Just like everyone, interest rate change. Interestingly, their interest rates are quite famous even now. They prefer to keep their interest rates in the negative or at break even because they like to keep their currency weak since they are an export currency. How interest rates have been very low in Japan for a long time. Quantitative easing, creating new money to buy assets and stimulate the economy is done. Along with that, the currency is also managed. Where do they mainly do business? By selling their goods. Now, understanding the yen and its unique role. The Japanese yen is a major global currency and also a safe haven. We have just discussed the USD, Euro, and Pound. Now we have come to the yen. The Pound and Euro are not safe haven currencies. After the dollar, the next safe haven currency, the next popular safe haven, is the Japanese yen. USD JPY is one of the most actively traded pairs. The yen is often used in carry trades. Why carry trades? As we discussed, use a currency which has a very low interest rate and use a currency with a very high interest rate. As I mentioned earlier, Japan does not like to keep its interest rates high. Even the Ministry of Finance intervenes. That's why. So, the advantage in carry trades is that when the interest rate is low, the profit margin is good. Buying yen at low interest rates, invest in higher yielding assets. Yen pairs can be active during the Asian session and can exhibit periods of consolidation followed by breakouts. Now, what are their economic indicators? We have the GDP, gross domestic product, measures oversize and gold. Japanese economy handles itself. Gauge business confidence in Japan. Trade balance shows the difference between Japan's imports and exports. Unemployment rate measures how many people are out of work. CPI, Consumer Price Index, measures inflation in Japan. Core machinery orders indicate the strength of Japan's manufacturing sector. Now, as we mentioned earlier, it is an exporter, a manufacturing economy, so its manufacturing industry matters a lot. Now, what influences the yen? Investment flows, money moving to and out of Japan for investment purposes can affect the yen. BOJ intervention, as we discussed. So, the Bank of Japan sometimes intervenes in the forex market to influence the yen's value. This is the same continuation of their actions as in the Group of Seven, where they manipulate their currency. Developments in the Chinese economy. China is a major trading partner, so if its economic performance shows good data, the yen will be strong. If it shows bad data, the yen will be weak, because it is a major trading partner. Trading dollar yen, popular pair. Dollar yen is traded in amounts of United States dollars. Standard rate of 100,000 United States dollars. Alright, it is not traded in yen, it is traded in dollars. Unlike the pound and euro, which are traded in their respective currencies. Pair values are calculated in Japanese yen. Traders need to have enough United States dollars in their accounts to cover potential losses. Okay, now how to trade with this? Look for short-term and medium-term trends. This is a very trending pair. When it goes into a trend, it continues in the same direction, and whenever there is a retracement, you can enter and get good entries. Pay attention to key technical levels and round figures like 190.50 or 150, 120, 130. Keep an eye like this. Potential.